This week was another big week for earnings, with lots of companies reporting and many great earning plays. I love playing earnings. It's a great engaging binary event with instant gratification. In this video, I thought I'd go over my earning plays for the week and which companies I'm looking at playing for next week. If you like this series, please give this video a like. First up, we got Qualcomm, which was reporting earnings after the close on Wednesday. When looking at its historical moves, I noticed that Qualcomm does move past its expected move, but is usually to the upside. So I wanted to play Qualcomm to the upside, so I decided to sell the 118 puts, which had a delta of about 12, which was a little beyond the expected move to the downside. The expected move to the downside was about 120, so I had a little wiggle room to work with if it went beyond that. It reported great earnings after the close, the stock spiked up the next day, and the trade was pretty much a full winner. I decided to let the puts expire worthless for about $73 in profit per put. On the same day, I also played General Motors. Instead of reporting after the close on Wednesday, they reported before the market opened on Thursday. When looking at its historical move, it has stayed within its expected move the last 6 times. But if you look at the past historical moves, the moves has been skewed slightly to the upside. So I wanted to do a neutral to bullish strangle. When looking at the strikes, first I looked at the call side, and it was either going to be a 37.5 call or a 38 calls. Anything beyond that was just too cheap. If I did the 37.5 calls and the 33.5 puts, it would have been a neutral strangle, but I wanted to lean slightly bullish. But if I did the 34 puts, I felt I didn't have enough of a leeway if the stock dropped. So I decided to stick with my 33.5 puts, but move my calls up to the 38. That would give me a tiny bit of positive delta. The next day, the stock popped up higher and the trade was a small winner. There wasn't much of a profit in the trade, so I decided to stay in the trade a little longer and the stock started pulling back, which then the trade became a good winner. I set a closing price to close the trade out, but it didn't quite reach my target. Then later in the day, the stock rallied and the trade went from a good winner to a small winner, so I held on to it to the next day. The next day, the stock spiked up and then pulled back. The initial spike up got me a little worried since it did breach my 38 calls. But then I ended up closing out the calls for about $36 in profit per lot. On Thursday, Square was reporting its earnings after the close. When looking at its historical move, it has moved beyond its expected move, but to the upside. So I was going to lean bullish and sell a put, a nice simple strategy. The stock had an exceptional move to the upside. I wanted to sell a put below its lows that it traded just a few days ago, but it was just too cheap. So I decided to move up a few strikes to the 155 put. When I put this trade on, the 155 puts was around a 7 to 8 delta. When they reported their earnings, the stock spiked up and the trade was going to be a full winner. The next day, when the market opened, Square really started moving to the upside, beyond its expected move. If you sold calls, it would have been a winner if you closed it out at the beginning of the day, else they would have been a pretty nasty loser at the end of the day. My puts were pretty much worthless, so I decided to let them expire for about $82 in profit per put. Roku was also reporting after the close on Thursday, and we can see that it has moved beyond its expected move in the past, but the last 3 times it has been within its expected move. I was going to pass on this trade, because not only has it moved quite a bit beyond its expected move in the past, but the expected move this time is much smaller than the previous moves. But since I normally trade Roku quite a bit, I decided to take a look at the options at least. First, I decided to go 2 times the expected move to the downside, because I know Roku can really move well beyond its expected move. 2 times the expected move was around the 185 strike. The delta was really small, but had an okay amount of credit, so I can work with this. I didn't have much of an opinion on this trade, so I decided to do a delta neutral strangle and sell the 270 calls, which was also 2 times the expected move to the upside. The overall trade didn't net a big credit or anything, but it was an acceptable credit since I was well beyond its expected move. When it reported its earnings, the stock moved about half its expected move to the upside, so I was like, great, it's going to be a full winner. The next day was when the move really started to happen, and it really moved to the upside, but since my cost was so far out of the money, I was still okay, and I ended up letting the trade expire worthless for about $129 profit per lot. Wynn Resorts was also reporting after the close on Thursday, and we see that from its last 6 earning moves, it has stayed within its expected range 5 times, and the one time that went beyond that was only by a small amount. So I wanted to sell a strangle. I looked at the weekly options first, but the markets was so wide, and I knew that the next day if I wanted to get out of this trade, I would have to pay quite a bit of extra due to slippage. So I decided to go to the monthlies, but I wanted to sell a put below its lows the past month or so. So I decided on the 67.5 puts. And from that, I chose the corresponding deltas for the calls and came to the 95 calls. I felt pretty comfortable with the trade, My break-evens were at the lows and the highs of the past 4 months or so. When the earnings came out, the stock dropped, but only dropped about half its expected move, so the trade should be a winner. The next day when it opened, it rallied back up to pretty much unchanged. The trade so far is a good winner. It's probably up about $70 to $80 per lot. I didn't close out the trade yet. I'll be keeping an eye on this next week. Electronic Arts also reported after the bell on Thursday as well, and we can see that from the past 6 historical moves, it has been well within its trading range. Initially, I was a little hesitant from trading it, because if you recall my Activision Blizzard trade last week, it dropped well beyond its expected move in the aftermarket hours, but rallied back unchanged also during the aftermarket hours. But after looking at its past earning moves again, I decided to sell a strangle. I did look at the weekly options and they were really wide. Even the monthlies, as you can see, the market was kind of wide. But if you look at the strikes with the higher option interest, the spread was much tighter. I initially wanted to do the 115 puts and the 140 calls, but then I thought about the Activision Blizzard move, so I decided to move out further to the 145 calls and the corresponding 112 puts for a delta neutral strangle. When I looked at the trade, I felt it was okay. I felt it was pretty far out of the money, and I wasn't expecting to make much from this trade since I barely collected any credit on this trade. When its earnings came out, the stock just collapsed beyond its expected move, and I was afraid it was going to drop further the next day. When it opened up the next day, I tried rolling my calls down, but the market was so wide I couldn't get it filled. I finally got filled and ended up rolling down to the 126 calls, and then the stock started rallying from 115 all the way back up to the 120s. If I didn't roll my calls down, I could have closed the trade out for break even, but it's okay, you win some, you lose some. Right now, the trade is a small loser. I'm probably down like $20 per lot. After the rally, the trade is currently delta neutral, and I'm currently still in the trade, and will continue to manage it and hopefully get out break even or with a small profit next week. And the last earning trade for the week would be Marriott, which reported before the market opened on Friday. Marriott has stayed within its expected move the last 6 earnings trades. The option market is pretty wide, so I decided to go to the monthlies again. The 115 call strike stood out to me. The 110s were too close for my comfort, and the 120 were too cheap. After deciding on the 115 calls, I went to the corresponding 90 puts. Plus, it was the only one with some decent option interest. With my range between the 90 and the 115, I felt pretty comfortable with this trade. My calls were near the highs, and my puts were just above the recent lows. The next day, when the stock opened, it rallied up, but stayed within its expected move. The trade was about a $60 winner at the open. I was still comfortable with the trade and decided to stay in the trade and will revisit it next week. Now I want to go over some companies that will be playing for next week's earning play. The first one will be Norwegian Cruise Line, which is reporting earnings after the close on Monday, and they are currently trading at their lows during this pandemic. They have typically traded within their range with one exception in February. I traded the earnings for the other 2 cruise lines, and they were both winners, and I probably plan to trade this the same way and will probably sell a put, because I'm more afraid of the potential move to the upside if any good news comes out, but we will see early next week. I've been trading Simon Property for the past several months, and they've all been good trades. When I realized they were reporting earnings after the close on Monday, and that they have traded within their range the past 6 times, I'm probably going to do a very basic delta neutral strangle in the monthly options going into earnings. Walt Disney is also reporting earnings after the close on Thursday, and we see that they have traded within a decent range the past several months. When looking at their historical moves, I noticed 2 outlier moves beyond their expected move, especially their last quarterly report. But I've been trading Disney for a while now, and has treated me well. I currently still have a position in Disney and will continue to carry that into earnings, but I'll probably do an earnings play as well, leaning bullish. I'm thinking about selling a put since I'm bullish on Disney long term. And the last one that looks interesting to me is DraftKings, which is reporting before the market opens on Friday, and the stock can really move, but the decent amount of premium in the options. Since the stock is fairly new, we only have 2 quarterly reports to go by, one above its expected move and one below. I do trade DraftKings normally, but I have taken off a majority of my positions going into earnings. I'm not sure if I'm going to be playing this for earnings. I'll take a look at it for sure, and if I see anything interesting, I'll probably play it small. If you like this series and would like me to continue it, please drop me a like down below. If you have any questions, feel free to ask me down in the comment section below. And also, if I missed any great earnings plays for next week, please let me know down below as well. And as always, if you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you in the next video.